Welcome to the Creating Wealth Show with Jason Hartman. You're about to learn a new slant on investing, some exciting techniques, and fresh new approaches to the world's most historically proven asset class that will enable you to create more wealth and freedom than you ever thought possible. Jason is a genuine self-made multimillionaire who's actually been there and done it. He's a successful investor, lender, developer, and entrepreneur who's owned properties in 11 states, had hundreds of tenants, and been involved in thousands of real estate transactions. This program will help you follow in Jason's footsteps on the road to your financial independence day. You really can do it. And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
Welcome to episode 1715-1715. Does the real estate market have a problem? Is it cooling off? Is it slowing down? When we look out long term, will we have a big decline in demand from buyers and renters? What does the future hold? Now, I'm not talking about the immediate future. Well, when I say, is the market cooling off? It does seem to be cooling ever so slightly. It's sort of not even worth mentioning. Just a little bit of resistance from buyers, I think, happening for the moment, but again, extremely minor. We'll see if it's a trend. I'm talking about long term. What can we expect in terms of demand? As I have mentioned many times on the show, and I have renewed my prediction a decade ago, or over a decade ago, I said that the demographics coming at the rental housing market are nothing short of phenomenal. That was back in about 2010. And I renewed that prediction last year in 2020, saying that the demographics coming at the rental market are nothing short of phenomenal over the next 10 years. I definitely believe that, and I'm sticking with it. They are just staggering how the rental demand is very, very solid for the next decade. But what happens after that? You know, we're long-term thinkers on this show. We help our investors make a plan for the long term. We're going to talk about that today, and it relates to, just a hint, population statistics. So we'll get to that in a moment. But one of my newsletters had an interesting piece, not an article, but an interesting piece about financial education. And as you know, if you've been listening to this show or any of my other shows for any length of time, we have so many other podcasts that we do. Just type Jason Hartman and wherever you get your podcast, and you can see all of the other ones as well. I am all about financial education. I think it is the most important education one can get. I taught junior achievement as a volunteer for 3 years, and after doing that for 3 years, I was absolutely astonished how these young people are just getting zero education in how to be financially successful, how to invest, how to buy a car. Should you buy your first car? Should you lease it? Should you buy new or used? And by the way, that's counterintuitive because right now, you probably all have a used car. Guess what? Your used car has actually appreciated in value. That is amazing, amazing, amazing. It really is. Maybe the first time ever. Why has that happened? Well, completely because of supply chain disruptions. But one particular item in the supply chain that has been disrupted is, of course, chips. The integrated chips. Those little processors that make the world go round, that are in almost everything today, the processor, right? There is a big shortage. There's a shortage of a lot of stuff, but those processors are holding up car production because I think, I recently read an article, and forgive me if I get the number wrong here because it may well be wrong. There's my disclaimer. Actually, let me make a broader disclaimer. Everything I say may well be wrong, but if you've been listening for any length of time, you know that most of it's right, except those interest rate predictions. I'm terrible at interest rate predictions. Yeah, not so good. Not so good at the interest rate predictions. But the typical new car has about 200 microprocessors in it. 200. These cars are like rolling computers nowadays. They are incredible. My new car that I never drive, I don't know, do I drive 5 to 7 miles a week? Maybe 20 miles a week? Like nothing. I don't even know why I own a car. It's such a waste of money. It literally doesn't move. Sometimes 4 or 5 days go by, never start the ignition. It's absolute waste of money. But nonetheless, I think it's a good idea to have a car just in case of emergency or, whatever. And we discovered during the pandemic that Uber and Lyft were not that reliable because of all the stuff that was going on. It was hard to get those cars. And of course, they put the taxi companies out of business. So it's very hard to get a taxi nowadays, too, because there's hardly any left, right? And that's the typical big tech thing. Come to market with artificially low prices, put all your competitors out of business. If you're Amazon, suddenly, out of thin air, lobby for a higher $15 an hour minimum wage because those poor mom and pop retailers, they can't afford to pay it. But since you're an overfunded company and your former CEO is flying into space, boy, Elon Musk must be jealous. He's the sort of main space billionaire that hasn't been to space yet. I bet he's going to go pretty soon. So there's some real competition. And he and Bezos, they hate each other. So, yeah, interesting. We'll see what happens there. But, by the way, speaking of Bezos, why didn't Mr. Politically Correct Bezos hand over the helm of Amazon to a woman, a person of color? I mean, hands it over to a white male. But yet, at the same time, he's preaching about how everybody's not woke enough. Well, Jeff, practice what you preach, right? Yeah, not a chance. Not a chance. All right, financial education. Very, very important thing. It is shocking that our schools teach virtually none of this. So let me share with you a couple pieces from this newsletter. Only about 50% of states require high schools to teach students personal finance, and there are many statistics that point out how financially illiterate our society is. So I guess 25 of the states, or hey, if you're Obama, what are there, 58 states? So that'd be more. Yeah, we've got 29 and a half states according to Obama, right? So there you go. Yeah, so they're not teaching financial personal finance, but even those that do, and I don't know which ones do and which ones don't, I bet the education is absolutely meager and probably not very good. More than 53% of adults say thinking about their financial situation makes them anxious. 44% say discussing their finances is stressful. About 66% of American families don't have savings that will even cover them for 6 weeks of expenses. 78% of adults live paycheck to paycheck. 80% of young people under the age of 35, I guess that's what they consider young, couldn't answer the majority of financial literacy questions. Now, I don't know what the questions are, but I assume they're not very hard. 54% of millennials, and they're not so young anymore, by the way, are concerned about their student loan debt. And that's about $1.5 trillion, a complete epic scam. Less than 20% of adults feel confident about their savings habits. So that is pretty bad. That is bad news, folks. Isn't it bad? Yes, it's bad. And of course, that doesn't apply to any of you because you are listening to the show and you care about personal finances, you care about being responsible, and you care about growing your wealth so that you can do important things. Remember, everything in life has a financial base. You got to take care of the money. It's like taking care of the basics, the food, clothing, shelter, oxygen. It's necessary. It is vitally important to take care of the money. Just take care of this problem, ideally early in life, and it'll be taken care of. Just got to get this problem out of the way. It's a challenge. You got to climb the money mountain, but once you do, you'll have handled it, barring some unforeseen catastrophe. But hopefully you have made plans for that. You have checked out our asset defense webinar and our estate planning webinar, and you've prepared for these surprises. So the statistics are pretty bad. So here's some counterintuitive stuff about those stats. Approximately 80% of all millionaires in the U.S. inherited nothing. Now, I must tell you, I did have an inheritance. When my grandfather passed away, he left me exactly $100. That's what he left all of his grandchildren, and he left his children $1,000. Not much, okay? He was a farmer with a 4th grade education. So there's my big inheritance. I inherited $100. It's the only inheritance I've ever had. But hey, I can make $100 grow too, right? And that's what financial education, why it's so important. So 80% of all millionaires inherited zilch, nothing. 33% of those people never made $100,000 in a single year. Now, isn't that amazing? So many people think it's about having a high income. And many times, as we've seen in professional sports, that high income works against people. It's actually a curse rather than a blessing. Why is that? Well, people take it for granted. They get into the spending habit, and the spending habits determine their financial future. They lack financial education. They blow their money like idiots. I mean, look at the stats of former NFL players. They're absolutely abysmal. The bankruptcy rate against former against, I don't know. Yeah, I guess. Maybe against, is that the right word? The bankruptcy rate of former NFL players is shocking. How can you earn millions and millions of dollars and then just lose it all? It's absolutely crazy. Other professional sports, similar problems. Movie stars, rock stars, celebrities, musicians, you've seen it in the media. It's absolutely amazing that people with that much money during the years where they're earning it cannot learn how to be good stewards of that money to make it grow, because they just lack the discipline. Remember, everything in life boils down to the compared to what question, right? That's the Jason Hartman question, compared to what? And a derivative of that question is the instant gratification question that I've talked to you about many times. And that instant gratification decision is, do I get pleasure now, or do I delay gratification for a bigger, better, long-term future? And I believe we need to do both at the same time. As we grow our wealth, as we're on our path, we're investing, we're buying good rental properties, we're going to jasonhartman.com and doing that, of course. Nowhere else. We're delaying gratification. We're sacrificing that money today for a bigger long-term future. So we're doing that. But along the way, we do give ourselves some rewards to incentivize our subconscious mind to keep doing that bigger long-term plan. And of course, if you go to YouTube and you type in Jason Hartman 5-year plan contest, you can see some great videos. You can see them on my YouTube channel. We've posted some of them there from some of you great listeners who entered that contest years ago and outlined your 5-year plan to grow your wealth with income properties. That's just the personal plan, right? So actually, I think what we'll do is we'll play one of those for you here today, okay? So I'll just get done with this and then we'll play one of the many, many 5-year plan videos. Okay, so 80% of millionaires, they got nothing. 33% never made over $100,000 in a single year. And so you can build wealth by simply being educated and being disciplined. It's really not that difficult. This newsletter goes on to say, it has become more apparent over the years that our school systems are not going to solve the financial education problem. Rather than waste time complaining about the lack of this education, right? Do something about it. Nike says, just do it. One of the things you can, of course, do is go to jasonhartman.com and reach out to us, and we can help you with a plan. We can offer you a free portfolio makeover to show you the highest and best use for your assets, how to make them work for you. Remember, your money is like, well, the way people used to think of children in the old days. This isn't true any longer, but in the old days, people thought of children as an asset for the future. My mother and her siblings, all four of them, she was, one of 5 children, grew up on a farm on a dirt road in upstate New York. They were very poor. And in the summers, I would go to upstate New York. A lot of times my mom would, get rid of me for the summer, and I would go visit Grandma and Grandpa. And I remember one time my grandfather drove me around, and, we were stopping in and seeing some of the neighbors. That's just kind of the thing you do when you live in a rural area. You stop in, say hi to your neighbors. They had this car, I can't remember what kind of car it was, with literally my grandfather's car, or grandmother and grandfather's car, had holes in the bottom where you put your feet. You could see the road going underneath because it was just rusted out. We went to visit one of the neighbors that was just, right down the street. Every house was about a mile apart down the dirt road where my grandparents lived. And I always thought my grandparents were really poor. But I remember we went to the neighbor's house, and it was just dirt poverty. I remember as a little kid what an impression that made on me. They were farmers and just living in absolute squalor. And listen, my grandparents didn't live much better, but it was better than the neighbors. Now, there were other neighbors up the street, the Shaddocks. They had a really nice home, okay? They had a nice farm. They were dairy farmers. Which, by the way, I was on Robert and Kim Kiyosaki's show yesterday, the Rich Dad YouTube show and podcast. One of the things I recalled reading in one of the Rich Dad books, and I mentioned it on the show yesterday when I was interviewed, are you a cattle rancher or a dairy farmer? Now listen, I'm not in favor of either. I'm not a vegetarian. I tried it for like 6 years in my 20s. I don't recommend it. I think we're meant to be omnivores, okay? But at the same time, I think we all should have some reverence and respect for animals that are sacrificing so we can eat. And not to go down a rabbit hole on that, the practices in some of these farms and slaughterhouses is just disgusting. It's awful, the way humanity is treating animals. It's absolutely appalling. But that's another discussion. Anyway, the metaphor of cattle rancher or dairy farmer is a really good one. Because the dairy farmer doesn't kill the golden goose, right? Well, that's a good metaphor too. The golden goose story that we all remember when we were kids, right? They want that goose to lay eggs or give off milk. And that's what we do as investors. We're not that interested in flipping properties. The people who flip properties, they have spending money. The people who buy and hold properties, they build real wealth over time. They are the dairy farmers. The flippers, they're the cattle ranchers. They raise the cattle, they destroy it. They get money for the meat, and then on to the next one. They keep destroying, killing the golden goose, if you will. Where the dairy farmer just milks the cow. So think of that. I think that's a good metaphor. All right, so let's get to some of our 5-year. Let's get to at least one of our 5-year plans. We'll see how long this is. Reach out, jasonhartman.com, and don't forget to register for our Empowered Investor Live event. Yes, a live conference. I'm so excited to see all of you. Yes, we are. We're totally excited to see you in beautiful Orlando, September 10th, 11th, and 12th. It's coming right up, folks. We're less than 2 months away. So be sure to register. We've got a really fun and a really educational event planned for you in September, and we will look forward to seeing you there. Can't wait. Go to empoweredinvestor.com. That's empoweredinvestor.com and get your tickets today. And by the way, if you want to join our Empowered Investor Inner Circle, you get a free ticket for the event. Join that and learn how to take greater control of your income properties. The monthly Zoom calls that I host, I personally host all of those, Q&A, lots of interesting guests on those. You won't hear them on the podcast. The networking with the other members and the ticket discounts, because if you are a member of the Inner Circle, you get your ticket for half price, $300 off. So it really, a lot of it pays for itself. Of course it does in education, but also discounts as well. So empoweredinvestor.com. We'll look forward to seeing you in September. And let's get to one of those 5-year plan videos right now.
Hello, my name is Muthiah. I am recording this for the Jason Hartman contest, but also I'm doing this so it'll help me clarify and visualize what I want 5 years from now. Earl Nightingale once said, "The people with goals succeed because they know exactly where they're going." Now, he defines success as the progressive realization of a worthy goal. Now, whatever that worthy goal may be, if you work at it deliberately and purposefully, despite the setbacks and distractions, I am convinced that you will have no choice but to succeed. Now, with that as my framework, I have carefully made 3 sets of goals for the next 5 years. I have been investing with the Jason Hartman Network and Platinum Properties since June of 2016, with the able guidance of Carrie as my investment counselor. As of today, December 23rd, 2017, I have 20 single-family homes that cash flow in my portfolio. The first set of goals that I have are my professional goals as it relates to real estate. What I'd like to do is to acquire 80 additional properties by the end of 2022. What that would involve would be acquiring 15 additional properties each year from 2018 through 2021 and accelerating that to 20 additional properties in 2022. Whatever the number of properties I acquired might be higher or lower, but I need to average at least 15 to 17 properties a year. It's a big undertaking. It requires creative thinking, creative financing, but I strive to achieve those goals. What type of real estate investments would I like? Primarily single-family homes. That is my bread and butter. I also want to acquire 6 to 8 duplexes, triplexes, or fourplexes, and maybe down the line some storage units as well. Now, one important thing for me is to make sure that they all cash flow. They have an RV ratio of 1.0 or greater. What strategies am I going to employ to acquire my 100 properties by 2022? My goal is to acquire as many properties as possible using low-interest, conventional financing, 30-year amortized loans. I also want to use HELOC on my primary home to acquire as many properties as possible and keep stripping the equity from my house as often as the property value goes up. Every 5 years or so, I want to do a 1031 exchange on properties whose values have risen. I want to take that money and double by buying a 2-for-1 or buying more expensive properties that generate a higher cash flow. On properties that are $75,000 or less, I would like to do a portfolio loan because it's harder to qualify for loans when the property values are less than $75,000. Another important strategy, which I did not believe was very significant in the beginning, I've now come to realize is very significant, is to find good property management companies that will relieve you of a lot of time and headaches. And so that's important, to find good property management companies that will handle a lot of this stuff, give you the proper accounting, credit your rent in a timely manner, and allow you to focus on acquiring properties. The next set of goals are my personal goals. My son, who's now 15, will be a freshman in college by 2020. Now, my goal, personal goal, is to have my cash flowing investment properties pay for his college expenses and provide me with a steady monthly cash flow. If all goes as planned, I will have about 50 properties by 2020. And with net cash flow of $300 per property, I would generate around $15,000 per month. When my son goes to college in 2020, I also expect to move out of the Socialist Republic of California into Nevada or Arizona, one of the tax-free states. I will still have my business in Los Angeles doing background checks through LifeScan. However, I expect to automate everything and leave my trusted employee in running the business. I'll continue to guide the direction of the business and advise my trusted employees on the big decisions, but will let go of the day-to-day operations of the business. Another personal goal of mine is to travel to 3 or 4 countries every month after my son starts college. Now, as you can see from behind me, this beautiful horse was a framed picture that I got from Malaysia. Now, I have always had a passion for riding, and one of my personal goals is to be able to buy a few horses, not worry about the boarding expenses or the veterinary bills, and be able to ride my horse anytime I need. So that's an important personal goal as well. The last set of goals I have are social or charitable goals. My long-term goal, which will essentially commence 5 years from now, is to set up a charitable remainder trust and to fund it to give back to society in the areas of education and feeding the homeless. This would include or involve creating college and vocational scholarships and working with organizations like the Tony Robbins Foundation to feed the homeless and work towards ending hunger, especially as it relates to young homeless children. Now that is my very ambitious 5-year plan, and I will strive as hard as I can to achieve those goals that I've identified. To all the lenders, property managers, and well-wishers who have helped me along the way and will continue to help me, I thank you for your encouragement and support. To Jason, Carrie, Fernando, and all the others at Platinum Properties Network, I count on your continued support on helping me achieve my 5-year financial goal. Thank you, God bless, and Merry Christmas.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.